If you put 10% of your portfolio into Bitcoin and wait 100 years, you've got wealth worth $100 million. You've got 100x as much money as you had. So if you want to build wealth, you start by putting a portion of your portfolio into Bitcoin and holding it a long time. If you put 50% of your portfolio, you end up with $500 million worth of wealth instead of 1 million. And if you just convert your $1 million worth of stocks into $1 million worth of Bitcoin and hold it 100 years, you end up with $1 billion worth of wealth instead of $1 million. So you become a billionaire.
Fiat currencies, including the United States dollar, are destined to debase, a pattern that has repeated throughout history and brought down powerful civilizations. Michael Saylor, executive chairman of MicroStrategy, believes that the United States, the current global superpower, is not immune to this fate, and signs of an impending collapse have already emerged. One of the early indicators of this impending collapse is monetary debasement, with the US dollar and related currencies losing an average of 7% of their value annually over the past century. Traditional investment options, such as stocks, bonds, and real estate, might preserve wealth, but they do not create substantial growth. According to Saylor, Bitcoin is the exception. Even a small allocation to Bitcoin in one's portfolio can provide a 14% return, making it a potential wealth-building asset.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
The best you can do with any conventional strategy, or either conventional equity or conventional property, is to keep up with the monetary inflation rate, which means you can't build wealth. You might be able to maintain wealth. On the other hand, if you take the $1 million and you invest 10% of it in Bitcoin and the other 90% in the S&P index, you can look at Bitcoin and say, well, what's the natural organic appreciation rate of Bitcoin? In my opinion, it should theoretically be about 14% a year versus the 7% a year for the S&P index. Because Bitcoin, it has all of the attributes of an asset that's a security, but it doesn't have the liabilities of companies. There's none of the dilutive effects that hold back a company apply to Bitcoin. The problems with companies are they have a management team, they have employees, they have products, they have competitors, they have regulation, they get taxed, they might screw up, they have execution risk. We could talk for hours about ways that companies don't work, but if you've studied corporate history and you look at 100 companies and you say, how did they screw up? You'll see one of those. And if you looked at a portfolio of commercial real estate or other real estate and said, well, how do you lose money? Well, it gets taxed, it gets regulated, there's the mayor of the city does something to it, it gets rent controlled, there's a war, it gets bombed, it gets decayed, an earthquake hits it, a lightning strike hits it, it rots, insects attack it, your renters don't pay their bills, someone actually blows up a bomb in front of it, the neighborhood goes bad. Lots of ways you lose money in real estate. So Bitcoin is digital property. It's like a big tech monopoly, but without the company liabilities. And it's digital property. So it's like good property, but you can move it anywhere in the world. It's weightless, it's indestructible. You don't have to pay to maintain it. So that's how you get from 7% to 14%. I mean, the first thing is you have to generate cash flow to invest. So you got to work hard at your job as a doctor, whatever you do, your vocation, you have to go and you have to generate cash flow or raise money to invest. You have to raise equity, raise debt, or generate cash. Those are the three ways to get the money. Once you have it, the difference between losing 99.9% of your wealth or generating 1,000x more wealth is, do you invest in cash? Do you invest in bonds? Do you invest in diversified equity? Do you make perfect investment decisions, or do you invest in property, or do you invest in Bitcoin? And the range is 1,000x on one end and 99.9% loss on the other end. And then it's just time. You have to let time work. Because the one thing that you can be sure of is time creates chaos and inefficiency. Everybody knows if you look at that house and you don't do anything for 100 years, you can predict the house is going to decay. Everybody knows if you hold $1 million worth of Argentine pesos and wait 100 years, they're going to be worthless. Do you know the peso used to be worth $1? And today, you know, as we're sitting here right now, the exchange rate is 570 pesos to the dollar.
Whoa.
Okay, do you know what the peso was trading at 5 years ago? 30.
30.
Do you know what the peso was trading at 1 year ago? 293.
Whoa.
So you have a very simple example where with the peso, if you waited 23 years, you would have lost 99.8% of your wealth.
In the interview, Saylor delves into the convergence of cryptocurrencies and artificial intelligence, and its implications for Bitcoin. He highlights the significance of Bitcoin and the Lightning Network, a Layer 2 payment protocol built on top of Bitcoin, and serving as attractive payment systems for various entities, including AI bots. These systems possess key qualities, such as autonomy stemming from decentralization and rapid transfers that transcend borders, in contrast to the sluggish nature of traditional bank transfers. Saylor dismisses the notion that cryptocurrencies and AI will disrupt each other, contrary to predictions by some crypto critics. Instead, he sees them as complementary forces that will fuel significant adoption and price growth. These developments signify a symbiotic relationship between groundbreaking technologies, poised to usher in massive advancements. Here are additional insights from the interview.
I think Bitcoin is digital money, which means that any two entities can trade it instantly. Okay, so that means that if you're an AI bot and you want to trade with another AI bot, you know, you need that. Right? Let's come back to a basic principle.
Yeah.
If I have $1 million and I want to trade it 40 times using a credit network, well, all 40 participants need to have a bank account with a local bank. They need to be able to clear through their central banks. And so you have 40 banks involved. You have 40 individuals with bank accounts. Each trade is going to take a month to clear. If I wanted to move $1 million 40 times on the Lightning Network, it would take me 1 minute, like 60 seconds to move it 40 times, and I would pay 1 penny, 2 pennies. So you see the difference is, and all 8 billion people on the planet could do it. 100 million companies, 8 billion people, right, could do it. So you have one system which is instantaneous and nearly free. And you have another, and open, and you have another system which is crippled, slow, and obscenely expensive. And so now you're an AI. Well, how do you actually get a bank account if you're an AI? You can't. AIs aren't people, right? You can't get a credit card. So if I spin up 100,000 AI entities, they can't get a bank account, they can't trade, and why would anybody want to wait 4 years and pay all their money in order to trade 40 times? So as a practical matter, you need a digital network in order to trade. Now the other point is, if you want an AI to function, you need to endow it with money. So how do I set up a bank account if I'm an AI, or how do I create a bank account for the benefit of the AI? There's no legal structure to do that, right? Like, so I could create an AI as an endowment, but if you're going to endow an AI, you need to endow it with Bitcoin, because you need to put money into the endowment. You need to assign it the Bitcoin digitally that will last forever, that it has control of. If an AI has Bitcoin, then it can actually generate yield, or it can actually it can actually do business. It can buy things, sell things, pay for its own computer servers. University endowments like Harvard, or Cambridge or Yale, they can last hundreds of years. The church can last 1,000 years, but they need an endowment of money or property, and that property needs to be managed by people with legal process. Well, since an AI isn't recognized as a person, right, it can't avail itself of the legal system. So if you want to create an immortal creature in cyberspace, then the way you would do it is you would power it or endow it with Bitcoin. That's what brings it to life. Without the Bitcoin, then it's not an autonomous creature. What it is a shadow.
Michael Saylor isn't the sole voice discussing the convergence of AI and Bitcoin and the implications for both technologies. Just a few weeks ago, former BitMEX Chief Executive Officer Arthur Hayes made a prediction that Bitcoin would become the fuel for AI. This prediction coincided with an announcement from Lightning Labs, the firm behind the software powering the Lightning Network. Lightning Labs revealed the launch of new developer tools that seamlessly integrate with large language models, including OpenAI's ChatGPT. The engineers overseeing this project have designed these tools to enable AI agents to interact with the Lightning Network's API, directly handling and managing Bitcoin through OpenAI's function calls. This innovative merging of AI and blockchain technologies aims to facilitate lightning-fast transactions over the Lightning Network. The engineers behind this project expressed their hope that these tools will simplify and accelerate payments for billions of individuals who lack access to conventional credit cards or banking systems, thereby unlocking the potential of groundbreaking AI tools for a broader audience. This announcement has been well received within the Bitcoin community, with many enthusiasts believing that the leading cryptocurrency is well positioned to serve as a universally accepted, impartial reserve currency for AI systems. Do you share the view that the intersection of blockchain and AI will bring significant benefits to Bitcoin and other cryptocurrencies? Please share your thoughts on this topic and Michael Saylor's interview in the comments section below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.